Welcome back to Roxham TV. I'm your host, Jamie. Honestly, we have a really heavy show today, and it's very clear that is exploding. AI is becoming a geopolitical weapon. OpenAI may be building its own phone. DeFi just had another brutal month, and after Hong Kong Web3 festival, we now need to honestly talk about where this industry is heading. So today is not just a market update. It is a full picture of what is happening across money, across technology, crypto, and global power. First, we'll start with the US debt crisis. The US national debt is now over $39 trillion. And yes, the US government is accepting donations to help pay it down through PayPal or Venmo. It sounds almost like a joke, but it's actually real. We'll break down how big $39 trillion really is, why donations barely make a dent, and why this debt problem keeps pushing people toward Bitcoin. Because when money can be printed with no hard limit, that can also grow beyond control. And that is exactly why Bitcoin's fixed supply matters. Then we moved into AI war. China has ordered Meta to unwind its $2 billion acquisition of Menace, which is a AI startup focused on agent systems. The deal was already closed, employees had already moved, but Beijing still stepped in and said, no, undo it. This is not just a business story. This is about AI becoming a national asset. The US is restricting Chinese AI, we know that already, and China is now doing the same thing in reverse. So we talk about why this is a major sign of AI Cold War. After that, we talk about OpenAI potentially building its own smartphone. Reports such as OpenAI is working with Qualcomm, MediaTek, and major manufacturing partners with mass production expected around 2028. And this is not just about making another phone. This is about OpenAI controlling the full user experience. Right now, ChatGPT lives inside Apple's App Store or Android and web browsers. That means Apple and Google still control access, permissions, distribution, and user relationship. So if OpenAI wants to build the future of AI agents, it may need its own device, maybe a phone where you don't open apps anymore. You can just say what you want and AI does it for you. Then we go into prediction markets. Brazil has banned platforms like Polymarket and Couchy. Regulators say these platforms look more like gambling than finance. And honestly, that is getting harder to ignore. Polymarket may use a real exchange style order book. It may be transparent on chain, but transparency doesn't always mean fairness. If insiders know something before retail users do, they still front run the market. And after recent cases involving people betting with privileged information, we have to ask the obvious question. Is it really investing or is it just gambling with better branding? Then we cover the rise of crypto kidnapping crisis in France. So the Telegram CEO is warning that this is no longer just about crypto, it's about data. If criminals know who owns crypto, where they live, and how much they hold, then crypto risk moves from online attacks to real world violence. Well, we've already covered multiple cases on this show. So now French authorities say there have been more than 40 crypto-related kidnapping or hostage cases this year. So we'll talk about why Bitcoin can still be secure, but your personal data might not be so much. After that, we look at the brutal month for DeFi winter. More than $600 million was hacked from crypto protocols in April alone. So Countdown, of course, the biggest hit this month. But we also saw issues across Litecoin, of course, Sui, and other protocols. And the bigger issue here is this, like when things break in DeFi, teams step in, funds get frozen, transactions get reversed, rules get patched. So we need to ask this question yet again. How decentralized is DeFi really is? Because Bitcoin has no reset button, no bailout, or no one in charge, but it just keeps running. I do want to spend some time to talk about Hong Kong Web3 Festival. To be fair, I did not attend the event in person, but I've seen enough, and I've talked to enough people to know the feedback on ground, from posts on X and from industry conversations to know that a lot of people were very disappointed, including myself. And as someone from Hong Kong, honestly, feedback like this, it hurts. There were reports of messy scenes, questionable promotions, protests, and people saying the industry has lost direction. But underneath that noise, something interesting is happening. The real builders are no longer talking about tokens, so that's a good stuff. They are moving towards AI, towards RWA, stablecoins, payments, compliance, and real infrastructure. So when we talk about what Hong Kong Web3 Week really tells us about the state of the industry, the hype might look very terrible. I've seen videos like that, I know, but the real work may be getting quieter and more serious. So today's show connects a lot of the dots. We have the US debt crisis, explains why Bitcoin matters. The Meta and OpenAI stories show how AI is becoming the next global battlefield. Brazil's prediction market show how regulators are reacting to gambling style finance. The France kidnapping cases show how privacy now matters more than ever. Of course, we'll touch upon the horrible event of some DeFi hacks and also Hong Kong Web3 Festival. So do stay with us because today's show is not just about what happened, it's about where the next phase of finance and technology is going. So without further ado, let's get straight into it. We'll start with the US debt clock. So of course, the number is $36 trillion in debt. And right now they're accepting donations via PayPal or Venmo. The question everyone is asking, like, how did the system get this broken? So as you can see, like this is actually not a joke. Its title was Gifts to Reduce the Public Debt. Like I know it sounds like a meme, but unfortunately not. Like you can literally send money to the US government through PayPal and Venmo. It's not a joke. So this program is run by the US Treasury, and technically speaking, it has been around since 1961. So this is not new, but what's new is the attention that it's getting right now. Because the number we are dealing with in this day and age has gotten so big and it's even hard to understand what $36 trillion, what it means to regular people like you and me. So $36 trillion, just to give you an idea of how big that money is, like even if someone donated $1 million every single day, that would take over 100,000 years to pay it off. So human civilization is only about 5,000 years old. So we are talking about a number that's way beyond normal scale. Now, here's the part that really matters. These donations are tiny compared to the problem. So, on average, the government receives about $120,000 per month in donation. That sounds a lot, but interest on that alone, that's around $88 billion per month. So the donations don't even make a dent. And if we zoom out for a second, because this, of course, did not happen overnight. This is a result of decades of government spending, of wars, of economic stimulus and money creation, all stacking on of each other. And over time, the system evolves into something very specific, like a system that runs on debt. At this scale, the system doesn't really pay off debt. It just rolls to the next periods, like meaning new debt is issued to manage old debt. And that cycle keeps going, and that's how the system stays alive. Now, make it even more personal, because if we look at this number, debt per US citizen right now is sitting at $116,000. So technically speaking, every newborn starts life already in the red. That's the scale of the imbalance. And as you can see, like the debt that clock, it just like keep climbing, keep going up at an insane rate. Like every second is going up. So there's no way of we can't go back from here. So this is treated the trend. We are on daily, but if we zoom out to maybe monthly, you can see this is a up only, like almost an up only chart. Like now, here's where things get very interesting because there are people in government thinking about a different approach. For example, Cynthia Loomis has proposed creating a strategic Bitcoin reserve. The idea here is quite simple. The US would acquire 1 million Bitcoin over time and hold it as national asset. You might ask why Bitcoin? Well, because Bitcoin is different. It has a fixed supply. Only 21 million will ever exist. So no printing, no expansion. Some estimates suggest that under certain assumptions, a Bitcoin reserve could help offset part of that national debt over time. Of course, not overnight, but maybe over a few decades. Right now, the proposal is still stuck in Congress, so nothing has been approved yet. But it shows you how people are starting to think differently about the problem. So when you zoom out, you see a very clear contrast. So on one hand, we have the people sending money through PayPal and Venmo, trying to chip away $39 trillion. And on the other side, you have a system like Bitcoin with fixed supply that cannot be printed. And honestly, the internet summed it up pretty well. People were asking, like, how do you end up with $39 trillion in debt in a system where money can be created so freely? And let's be real, this is what happens when money is not scarce. When it can be created, when it can be expanded and injected into the system over time, that grows faster than it can realistically be paid back. Because like this is not just a government issue we're talking about. It affects inflation, it affects purchasing power and the value of money over time. When more money enters the system, like each unit becomes more worthless. So if you're watching this show right now, I'm sure you're smart enough to know, like all ways eventually lead to Bitcoin. All right, so that's for the US debt crisis. Right now, I do want to shift gears a little bit and talk about a AI deal being blocked by none other than China. So what happened is like, imagine this, like imagine buying a house, moving it, and living there for maybe 4 months, only for a foreign government to show up and tell you that the sale is void. That's exactly what just happened to Mark Zuckerberg and Meta. In a move that has shocked everyone in Silicon Valley, China just reached out and ripped a $2 billion deal apart. This isn't just about business, it's actually about power because China just proved that they can stop a US company from owning the brains of the future. And if Meta doesn't listen, they could lose everything in Asia. So here's the detail. So China's top economic regulator has stepped in and ordered Meta to unwind its $2 billion acquisitions of Menace. So of course, like Menace being a AI startup focused on agent-based systems. The deal has already closed 4 months ago, but right now, Beijing is forcing it to be reversed. And just think about it, like the deal, it was stuck. Like employees had already moved, integration had already started, and still the government stepped in and said, like, just undo it. And here's what it gets even more serious. The co-founders of Menace were summoned to Beijing in March, and they have not been allowed to leave the country. And at the same time, around 100 employees had already relocated to Singapore, working out of Meta's office. So the company's website still say like Menace is now part of Meta, but in reality, we know like Beijing has ordered the deal to be reversed. Now, here's the interesting part. China's Ministry of Commerce framed this around with a very specific question. So, is it an AI team or an export? Because Menace tried to move itself out of China. In mid 2025, they relocated to Singapore, shut down Chinese offices, and reincorporated as a new entity. So why did they do this is obviously to avoid restrictions, both from the US side, so US side may be limiting investment into Chinese AI, and for the Chinese side, maybe controlling IP, so intellectual property. Regulators are calling this Singapore washing, so meaning moving your company on paper to avoid regulation. Beijing basically what they said is that it doesn't matter where you move. If the talent, the knowledge, and the technology came from China, we still consider it ours. So the Chinese government literally blocked the deal and forced it to unwind even after it was completed. Now we zoom out because this is not just about Meta, and of course not just about menace. The US has already been restricting investment into Chinese AI. Now China is doing the exact same thing in reverse. Both sides are building wars around AI because when you build something this important, like it stops being just a business, it becomes a geopolitical asset. If the US can't have it, China doesn't want them to have it, and vice versa. And of course, we're just entering the beginning of the AI battle between these two giants. All right, so we'll take a shot from here. When we come back, we are diving into more AI story, and this time, OpenAI is getting into the hardware business and trying to build a phone. So that sounds very interesting. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxome. 11.5%. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. Now, if you've been watching Roxham TV, you know the AI war is moving fast, but while everyone is still talking about software, OpenAI just made a move that could change the device in your pocket forever. So imagine a phone with no apps, no clicking on icons, no scrolling through different apps, different browser. Instead, the phone is the assistant. Like, it doesn't just talk to you, it does the stuff, it does the work for you. So what just happened is that reports are coming out that OpenAI is working on its own smartphone. Mass production is expected around 2028, and they are not just doing this alone. They are working with major chip companies like Qualcomm and MediaTek. On the manufacturing side, a major supplier will handle design and production. So this is not just an idea. This is a real supply chain being built. Like, of course, this picture definitely AI generated. It doesn't suggest that what it will look like. It's just like what we expect to look like. Okay. Here's the key question. Why would an AI company want to build hardware? Like they already have apps, they already they everywhere for OpenAI. Everyone use ChatGPT these days. But actually, if you ask me, OpenAI is still missing one puzzle. OpenAI simply don't control the platform because if you think about it, like how you interact with ChatGPT these days, so you would open your iPhone or Android or web browser, which means they are sitting inside platforms controlled by other entities. So other entities, when it comes to it comes down to like companies like Apple or Google, they control the App Store, they control permissions and distribution and user access. If those platforms decide to do something funny to open AI, maybe Gemini, actually Google want to promote their own AI being Gemini instead, they could do so. They could limit access, they could change rules because they just have the power to do so, and OpenAI can't do much about it. In simple terms, for OpenAI, they don't own the pipe. They don't own the user, and that is a problem. Building a phone means owning the hardware, also owning the operating system, and also the user experience. So there's no middleman involved. This is not just innovation we're talking about. This is protection from OpenAI, especially after the code red that the C-level people give out. Because if AI becomes the main interface, whoever controls the device controls the users. Like right now, phones are built around apps because you think about it, you still have to open the apps you want to interact with. You have to switch between apps and you manage everything manually. But what OpenAI envision it will do is that instead of you opening that app and pushing that button on your phone, you just say what you want and the AI handles everything for you. So that is a major shift, like from app-based interaction to intent-based interaction. So you don't open a ride app. You just say, oh, give me a ride to a certain location, and the system does it for you because that changes everything. Like apps will become invisible. They become tools behind the scenes, not the main interface anymore. And phone in this case does sound the most sensible solution for OpenAI because to do that properly, AI will need full access, whether it's your location, your calendar, your messages, and your behavior. And you can't just do it as an app like OpenAI currently is, at least not completely, because platforms restrict access. Second reason for this move from OpenAI is, of course, data. Your phone is the most important device you own. So it knows where you are, it knows what you're doing, who you talk to, and who you buy. From AI to be truly useful, for AI to be truly useful in its context, it needs real time context we're talking about. Without that, AI is just guessing. Most likely scenario is that you buy the phone and then you subscribe to the AI services and everything is integrated. This is similar to what Apple did because Apple has a full ecosystem. Of course, it has the hardware, it has the app ecosystem and recurring revenue. But this time, AI is entering the hardware business as well. So instead of just apps, you have AI agents. Instead of building apps, developers build tools for AI to use. Before this, we have you need to download app, use it and open it yourself, everything so manually. But in the future, what we're talking about, like what we envision, is that you could just like ask your phone and the AI agent will execute on your behalf and everything will be done. So do pay attention here because like this technology is coming, maybe not in the next 10 years, but maybe sooner than that, or could be very soon. So question being, are we getting close to what Black Mirror portrayed the world to be? Does it scare you or does it not? Let me know in the comment section below. All right, so moving on to another story of today. So Brazil just did the unthinkable. Well, not unthinkable. It's actually joining the lines of many countries around the world because they just banned prediction markets, and of course, it includes platforms like Polymarket and Kalshi. So no access at all, freely blocked inside the country. So what just happened is Brazil regulators say these platforms break local derivative laws. And more importantly, they say these markets are not even real financial products because they are based on politics, elections, social events, and random outcomes. No actual economic indicators. So that's why they shut down. So however, I do want to simplify this, like how Polymarket works, because like okay, we are, for example, we are on Polymarket right now, and I just click on a random poll. So, this is like U.S. Iran permanent peace deal by a certain date. So if we actually scroll down, and you can see the order book right here. So the order book is actually showing you the depth of the basically the liquidity, and there is like ask and bids. Of course, can we show the screen on for the viewers? So like it's like ask and bids for us to see to gauge how active retails are trading for certain pool. And what I'm showcasing here is like a Polymarket is not just some random gambling website. It runs like a real exchange. So it uses something called a central limit order book. So CLOB. So this is what it looks like. Basically just what you would see from a crypto exchange. The same system as a stock market. So you have buy orders, so bid buy, bid ask, buy orders. You also have sell orders, and prices moving in real time. You can literally see everything from this like order book itself. Secondly, I want to mention is that Polymarket is actually running on Polygon. So Polygon being a blockchain, what does that mean? That means all trades are on chain, all activity is transparent, and anyone can track it. So from a tech point of view, this is actually very open. But however, transparency doesn't mean fairness because these markets are of course tied to well events. So if we just like scroll to literally the first page of Polymarket, you'll see everything, like mostly everything, is about geopolitics. So we have Trump, Iran, Indian elections. So all this information to an actual real world event. If you have inside information, of course you have an edge. We just covered a case earlier here on some TV. So a US soldier used classified info to make money on these markets, and that tells you everything you need to know. The closer you get to these real events, the more valuable insider information becomes. And for us retail, of course, we are always the last one to know the information, and we are the guys who are always in front run. And let's be honest, at some point, this stops looking like investing. It starts looking more like gambling side because, like, of course, it's not just geopolitical event. You can bet on sports and even on crypto or even on the weather, for God's sake, or culture. That's one of the tab they have on Polymarket. So you're betting on everything. You are not investing in cash flows. You're guessing outcomes because not everyone has the same information. So this is not just gambling, it is uneven gambling. And what Brazil is doing here, so they are basically saying this is not finance anymore, this is speculation. It needs to be controlled. These platforms do provide signal, of course, like Polymarket. I love using it because it's kind of like a gauge of what the whales, what the big guys are doing because everything is transparent. You can actually look at the order. So they reflect market sentiment, real world probability, and crowd expectations, and sometimes even better than polls. So I do find it very, very valuable. And like especially when there are big orders on Polymarket, you know, like more often than not, like the insider knows something that us retails don't. Like in fact, there are people making a lot of like good bucket of money just from tracking these whales on Polymarket. So, however, there's always a trade-off when it comes to prediction markets like this. Like on one side, it is like open, it is an open market. You get free information and price discovery. However, on the other hand, it does look like a gambling side. So that is gambling risk. That is insider advantage, and retail keeps getting squeezed over and over again. So let's call it what it is. Market is built like a stock exchange. Like we just look at the order book together, but it behaves like a casino. It actually becomes worse than casino, in my opinion, because in a casino, at least the rules are clear. So the bottom line is like Prevail banned banned prediction markets, not because of the tag, but because of what they represent. So final thought, you asked me if it walks like a dog and quacks like a duck. It's probably a duck. And in this case, it's starting to look a lot like a casino, not gonna lie. All right, so speaking of crypto, there is again more dark story coming out in our industry. So this is actually getting more serious by week. And if you've been watching the show, you probably know this pattern already because we covered multiple crypto kidnapping cases recently. Now, this is no longer isolated. This is starting to become a trend. So what happened? Of course, here we have the CEO of Telegram. So he posted this on X. So he is speaking out, and his warning is very clear. This is no longer just about criminals chasing crypto. This is about data. So what he posted on X is basically saying there have been 41 kidnappings of crypto holders in France in just 3.5 months of 2026. And his key point is this, like more data equals more victims. Now, here's where it gets serious. So the CEO claimed that French tax officials may have been leaking or selling data on crypto holders. That is, of course, a strong claim, but there is some real context behind it. So, French prosecutors have already charged a tax employee. So, this is the name of the person. So, she is accused of abusing internal systems, accessing sensitive data, and allegedly selling that info to criminal networks. We are talking about personal data, financial records, and crypto exposure. So, criminals, in other words, they're not guessing anymore. They are targeting people with known holdings in crypto. This changes everything because now it's not random and it's very precise. If someone knows like who you are, where you live, and how much crypto you hold, you become a direct target. And this is not theoretical. It's already happening. So on 20th of April, two armed men broke into a family home in France. They tied up three adults, separated two young children, and forced the family to transfer around 700,000 euro in crypto. And think about it. This is not just about hacking. This is physical violence using real world pressure to extract digital assets. French authorities say there have already been more than 40 crypto related kidnappings or hostage cases this year. In April alone, 5 attacks were reported and 4 of them in France. So that's interesting. Now we zoom out because this is where things change. Crypto used to be about online risk. That's what the ledger is about. It's about like when it comes to online risk, we have to be careful with scams, with hacks or wallet breaches. Now the risk is moving into the world. Like we're talking about your identity, your location, your holdings, all connected. At the core of this is data. Once your information is stored somewhere in a database, in a tax system, or on exchange, it becomes a potential leak point. So you are no longer anonymous, you are visible. And in some cases, you are quite vulnerable. But does it mean like holding crypto is dangerous right now? So let me be loud and clear. Like, of course, holding Bitcoin itself is very secure. The network works exactly as designed. But this is the whole story because, like, security doesn't just stop at the protocol. If your personal data leaks, your real world safety at risk. So there are actually two layers here. First one is digital security. That's what the ledger or Tengen is about. Second is physical security. So Bitcoin protects number one, being the digital security, but not the other one. So right now, we need to be careful here because this affects how you manage your crypto. It's not just about private key wallets or passwords. It's also about privacy and exposure and personal safety. So the more visible you are, especially when it comes to online, the higher you put in higher risk you are exposed to, like especially your holdings are known because like I do see idiots on X, they like to post a screenshots of how much money they have to show to everyone. So in other words, they're very exposed. So I would say my take for this news that there's actually nothing wrong for living a humble life, and please do stay safe out there. So we'll take a short break from here. When we come back, we'll dive in the world of DeFi because DeFi is collapsing and April has been really brutal for DeFi so far. I don't want to say it's a DeFi winter because it's not just a winter because winter is just a cycle that comes and go. But like DeFi is seriously at risk. In April alone, there was more than $600 million lost in just 1 month. So it's not just one incident. We are talking about multiple hacks across multiple chains all at the same month. So it sounds very worrying, but we'll take a short break here, and when we come back, we'll give you details. So stay with us.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxanne TV, and thanks for sticking around with us after the break. We're now diving into DeFi because the hacks in DeFi have surged, and the number is quite concerning. Everything happened in just April, the same month. According to DeFi Llama, more than $624 million has been hacked from crypto protocols in April this month alone. That is, of course, not a small number. The biggest hit came from DAO. We covered that extensively on Roxham TV and how it got a cascading effect to other protocols, including Aave. So for DAO alone, that was roughly $219 million being hacked. And then you have a series of smaller exploits across other platforms, pushing the total even higher. And right now we have this strong bar, 624 or close to 120, $625 million. Now, this is not just one bad project. This is happening across the entire DeFi space, the entire DeFi ecosystem. Just like, look at this list, man. Like different chains, different protocols, but the same outcome. Like funds got lost, systems breaking. Now, the most chaotic situation came from Litecoin, and it's just like it happened recently. And this one is a little bit technical, but bear with me. I'll break it down simply. So over the weekend, the network experienced what's called a chain reorganization. So about 13 blocks were affected and it lasted over 3 hours. So in simple terms, what happened is that the network had to so-called rewrite the part of its recent history. So during that window, attackers tried to double spend, meaning spend the same coins twice across different systems, especially targeting cross swaps. So according to reports like this was triggered by a zero-day bug. This is a bug nobody knew before. It caused a denial of service attack. So mining pools were disrupted and some outdated nodes accepted invalid transactions. So because those invalid transactions allowed funds to move to third-party decentralized exchanges, before the network stepped in and reversed those transactions and patched the issue. So transactions actually happened, funds moved, and then later the system wrote it back. Now it just stopped there because when it comes to DeFi, everything it moves like a layer. So all the protocols is stacking on top. So that's why it is really risky when it comes to choosing a DeFi protocol. So on Ethereum, we had the DAO X. We covered that, I think, a week or two ago here on Roxham TV. And even on Sui, like a protocol called Scallop, around 150,000 Sui, they had to pause operations and cover user losses. So we are spotting a pattern here when it comes to DeFi risk. So it's just different names. Same pattern, exploit happens, a protocol paused, the team steps in, and damage control begins. Because like this is not just about hacks. This is about how these systems actually work. So when it comes to DeFi, it's called decentralized finance. It's built on one core idea, which is decentralization. So no single point of failure, no central authority. But however, what we have been seeing is there were bugs, and then there were admin controls, outdated nodes, and cross-chain bridges is always a DeFi bridge, and all becoming attacking points. And when something goes wrong, guess what happens? The team will step in, funds get frozen, transactions get reversed, and rules get patched. It tells you there are control points, even the name suggests decentralized finance. Like there are people who can step in and change the outcomes. This is not really decentralized. This is just a system with layers of control. Now, to be fair, like some people would say, like this is actually good, like because users get protected. Of course, that is a good news. Funds get refunded, get recovered, and damage gets limited. But that is always a trade-off. And I feel like a lot of people in crypto, they don't understand the risk they are choosing. Because when they can just step in and fix things like that, that also means they have power. And if power exists, they can be used. Now, if we compare that to Bitcoin, of course, there's no reset button, no rollbacks, no one freezing funds, no one in charge. The system will still run and it keeps running, and that's it. If something goes wrong with Bitcoin, there is no undo button. no patch, no bailout. DeFi tries to be flexible, try to fix that, and try to be decentralized while Bitcoin stays rigid. And this is where I think many retailers in crypto don't fully understand the risk they are choosing in DeFi. There is always a trade-off. You are always choosing some sort of risk, even though you might not even know it. Like you're not just taking market risk. When it comes to DeFi, there is smart contract risk, there is protocol risk, there's governance risk. And like when it comes to bridges, is the number one target for North Korean. So every layer adding on top, and we have seen that the classic example we have seen is Countdown, and all the protocols are somehow connected. And even Aave was nothing wrong with this code, everything was running smoothly. It was nothing about the smart contract. Somehow Aave is still affected deeply by Countdown. So this is just another example I would like to remind our viewers. Like the bottom line is over $600 million lost in 1 month. Multiple protocols hit, networks disrupted, funds frozen, transactions reversed. So DeFi, they claim they are decentralized, but when things break, control shows very quickly. And that raised a real question, how decentralized it really is. And can so-called DeFi come at this current state? I mean, I used to love DeFi, not gonna lie, and I cover a lot of the tutorial on DeFi. Right now, I don't have any money on any DeFi platforms, not only for airdrop farming. I just feel like it's not worth the risk, and seeing all the hacks, and it's just not worth picking pennies in front of in front of a train. So that's why I'm not even farming for airdrop these days. But let me know if you think DeFi is going to come back, and we'll have a discussion in the comment section below. All right, so move on to the next interesting story, and I do want to provide you guys a wrap up because last week here locally in Hong Kong, it was the Web3 festival, and honestly, I'm very disappointed, and I have just seen enough people from people on the ground because I've been doing interviews, like interviewing different founders, and to be fair, there are a lot of people flying over to Hong Kong just to attend that Web3 event, like from last week. But like the disappointment that the negative feedback I've received is enormous. So whether from people on the ground or from posts on X or from direct feedback across the industry. And I just want to take a moment in today's live stream to give you a clear summary of what happened because not everyone came to Hong Kong to visit that event alone. So this event, so the Hong Kong Web3 Carnival event, this is the official website. It's very colorful, very energetic, and it's supposed to be innovation, like builders coming together, having proper discussion, panel discussion, and it is supposed to be the feature of Web3, like a place where the industry comes together and push things forward. However, the feedback this year is so negative that I'm really disappointed. Let's just put it that way. And I'm not trying to sugarcoat it. People are describing scenes like this. So here is another example of some pictures taken from the Web3 festival. So there are scenes like micro business hustlers crowding around hot pot dinner, hot pot tables, trying to pitch deals. And then this is another interesting picture being taken from the Web3 festival around that event date. So here we have porn star, so AV actress, so porn star and escorts making out in public. And we have on-site protests demanding that payment, and even speakers hyping questionable schemes, so-called very scammy-like. This is what people expect from a serious tech conference. If you scroll on X, like you see a pattern, like everyone is complaining about Hong Kong Web3 Festival, that this is not Web3 at all. This feels like a joke, and honestly, it feels like a joke. I mean, I'm feeling ashamed for Hong Kong hosting an event like this. Like the industry kind of feels like it has lost direction. like locally in Hong Kong. And honestly, it's hard to ignore that sentiment. But not only this, there is actually something interesting happening on ground. So despite all the negativity we have seen online, but there is actually real data during the Web3 festival, like inside the actual conversations happening around the event, like something different is going on compared to any of the previous years I've ever seen. Like this year, simply no one was just talking about crypto at all. Like builders are still there. They're still actively building something great for us, but they are not talking about tokens. They're not talking about prices of narratives of Web3 anymore. A lot of them, they actually pivoted. So they used to build DeFi, but we just cover DeFi. It's kind of going nowhere. They would like to think it's DeFi winter, but I feel like DeFi is on the I would say on the brink of collapse. And these founders used to build DeFi, and some of them they build NFT projects and on-chain tools. But right now, they pivoted to focus on AI, on data infrastructure and RWA instead. So here's a key insight. There is a new direction that I spotted. Like people did not just disappear, they just pivoted. And honestly, it makes sense because all personally speaking, I don't think it's gonna make a comeback. Alt season, I think maybe a very selective of altcoins. We're talking about 0.01% of the altcoins we see today might have a tiny rally. Then I do not think that that rally would last for too long. So it makes sense for actual builders who is trying to do good things in the tech world is just simply pivot from crypto to AI or to RWA. It's actually very sensible, and I have great respect for them. Now you also see a similar pattern, similar names. So you have OKX, you have Tron, Hashkey, but topics for these big organizations here in Hong Kong. The topics is mostly still RWA and AI. Because to be fair, like all these actual builders, not just project builders, but like bigger organizations, they are starting to feel the frustration in altcoins as well. Because I have talked with numerous founders. Like I've done interviews with different CEOs in my career in crypto. So I know the frustration. Like if they are building something great, crypto maybe just a tool, not even a token that we're talking about. May tool first and then the tokens come after. But like there's so much frustration. People are pointing fingers at them. They're not doing anything great. They are just like scamming some money, some rug pull. I mean, very frustrating. So what we're seeing is that there are a wave of talents going away, so trying to stay away from crypto and into AI. And that is a trend that I've been spotting. And not gonna lie, it might be a good thing too. So let's be real here. Like a lot of the AI talk, it feels really early because like during the conference, like people say, okay, AI and Web3 will combine. But when you ask like how did they do it? Well, there's just simply no clear answer they could give out because what's happening here is that the old story is gone and the new story is still being figured out. However, if we compare the Hong Kong Web3 event, and if we also compare to the Thailand one, because more or less is almost the same period. So some people would choose to go to Hong Kong instead of Thailand. Some would do vice versa. But I do want to talk about the Thailand one, the Money 2020 in Bangkok. And that was a completely different energy. Of course, like some of my friends went there. And what was happening there in Thailand is that there was no chaos. So there was like definitely no porn stars making out in public for people to take picture. There was no distractions. It's just like business. People talk about payments. They talk about stablecoins and cross-border systems. So crypto companies were still there. There's another example. So Red Dot Pay, again, the team comes from Hong Kong. They joined the Money 2020 as well. And what I would say is like they are not just crypto token, but they are selling infrastructure. So, for example, Red.Pay, they're selling payment rails, custody, and compliance, some actual use case for daily people like you and me. But stablecoins are still the focus for Money 2020, from what I heard. Nobody cares about token price there. What they care about is speed, cause regulation, and that happens to be a major shift so from hype to infrastructure. And from these events, I do see an irony because the most crypto people are becoming the least crypto people. Like they're moving into AI, into fintech and TradFi. Web3, I just find it very ironic because Web3 was supposed to replace the system, but right now it is being absorbed into it. So let me be honest about these events. So surface of the industry looks very messy right now. In some cases, very embarrassing. But underneath that, there is still real work happening. So I don't want to deny the work from the actual builders. It's just getting quieter and less hype and a lot more practical. Okay, so that is just a quick summary I have for Web3 Festival. Let me know if you guys attended, if you think my analysis or my quick summary was correct. But speaking of crypto, let's also hop to Bitcoin and give you guys a quick price update because from what we saw compared to the show we've done yesterday to today. So right now we are on a correction. So we are sitting at $76,000, and this is again like the reason why I keep going back to price update, especially on the daily, because we are on the brink of the really delicate and critical level. I've drawn this bear flag, so this resistance line, literally months ago. If you go back to the track record that I have on some TV. So basically, I talk about this deviation. Okay, there are candles closing above this level, and then right now we end up getting rejected again. So we have a close below the resistance, and then this daily candle. Of course, we haven't closed this yet, but we'll see. But point being, we are at the very delicate point. The reason why it's very delicate. Okay, that was some optimism. I'm not going to lie. I'll give Bitcoin that. I'm not being a perma bear here. But I cannot deny the fact that whenever we go to the RSI resistance, we just end up being rejected here. So we're on the daily candles. What I've done here is just like connect the dot of the top of the RSI on the daily, and then we find this resistance line. And at the same time, we have the support line too. So this support, we are still in control because we are still above this support line. And to be fair, like we had support before, we had support before as well. So like whenever we broke these support, that means like prices are about to go lower. And this is like okay, we still haven't lost the support yet, so to be fair, but we are squeezing inside this really tight range. So when we are squeezing, that means momentum is building, so either or down. So in the next coming days or this week, I'm watching this candle if or especially RSI too. So two things I need to see, like whether to validate we are officially done with the bear market, which I think the probability is lower, or we are entering the third leg of the bear market, the third phase of the bear market. So first, I need to look at the bear flag. Second is that I need to look at RSI. So if the RSI basically lose that level of support, of course, this is a bearish stuff we have seen. And then speaking of the RSI, we also have a bearish divergence. A bearish divergence means the RSI is going down while the price is going up. So of course, this is not what we want to see as well. So this is a second thing I want to see. I'm looking at, I'm eyeing very closely. And then the third thing is the price action. So when it comes to the bear flag, are we still using this resistance and the strength of the candle, or are we going to bounce back and go to the basically support line of the bear flag? So this is what I'm eyeing very closely. But until that, I'm taking it one at a time, not drawing conclusions saying, okay, we are going to bottom out on exactly 5th of October. But it's just like a reference we could look at. And that is because it happened like basically 3 times before. So it's just like to know that could happen. There's a possibility that could happen. All right, so that was the quick update on Bitcoin's price. That's all the stories I want to cover in today's live stream. So before you go, make sure to give us a follow on X. My X is jamcrypto_io. To follow Roxum TV as well, because like we are doing regular updates about the news, about Bitcoin, about AI, about geopolitics. So point being, there's so much valuable content you probably do not want to miss. So do give us a follow on Roxum TV on X. So make sure to subscribe our YouTube channel as well if you haven't already. As always, my shows are live here through Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded version is also available on both channels. So being Dream Crypto YouTube channel and also Roxum TV YouTube channel. Thank you guys for watching, and I'll see you guys in tomorrow's show.